Stock market returns are never guaranteed. This video is for educational purpose only. Hello and welcome to DK Global Market Insights. This week, both the S&P 500 and Nasdaq 100 hit the pause button near the resistance levels. We have already discussed about the resistance in the last week. Despite the strong economic cues, market sentiment shows some signs of cooling off. Is this a healthy consolidation or a sign of a fatigue? Let's break it down with data, sentiment, and price action. Global market snapshot. Starting with the global markets, FTSE 100 from UK slipped 0.86%. Germany's DAX lost 0.7%. Japan's Nikkei 225 stood strong, up 1.5%. Seng index corrected sharply, down 1.52%. In contrast, India's Nifty 50 closed higher by 1.59%, defying the global cues. This contrast signals a mixed risk appetite globally. US indices this week. In the US, both indices saw muted movement. S&P 500 closed down just 0.15%, almost flat. Nasdaq 100 was nearly unchanged at minus 0.02% only. Technically, they are still above the key moving averages, a positive sign, but the narrow trading range suggests some kind of caution among traders ahead of the macro data and earnings. Sentiment analysis. Sentiment metrics show a clear shift. Fear and greed index dropped from 60, that is greed zone, to 55, which is a neutral zone this week. Put call ratio 5-day average is at 0.72, shows cautious market positioning. VIX fell by around 1%, remains below its 50-day average, indicating calm but possibly complacent. So we are seeing a cooling off in both risk appetite and volatility expectations. Fed policy outlook. Is July rate cut coming? On macro front, the big story this week was Fed Governor's Christopher Waller's statement on CNBC. He said inflation is cooling enough that a rate cut may come as early as in July. This is a clear pivot in tone from the Fed. And 10-year yields responded, falling to 4.377%. Even the 2-year yield, which tracks rate expectations closely, dropped to 3.908%. Lower yields is equal to lower discount rate is equal to good news for equities, at least in the theory. What does it mean? So why didn't market rally? Because the traders are still in the mood of show me the data first. Even though rate cut signals are emerging, uncertainty remains around. Actual timing of the rate cut, labor market softening, tariff effects on inflation. Also, some Fed officials prefer wait and watch approach, which adds indecision in the market. Let us now jump to the charts of S&P 500 and Nasdaq 100 to see how the price action aligns with this macro backdrop. This is the price chart of S&P 500 index in weekly time frame. The index finally closed at 5,967.84 and thus it was almost flat in this week. Look at the price action. This is the strong area of resistance and now the price was rising in a parabolic fashion but did not give a breakout. And it is, in my opinion, is a strong sign. Why it is a strong sign? If the price consolidates near the resistance area and then gives a breakout, it is likely to be a healthy breakout, sustainable breakout. Now, what we can see here, further, the importance of this impulsive wave, the recent impulsive wave, after this major correction in S&P 500, if you do the retracement analysis of the corrective wave, and price is not trading quite above golden ratio and also 78.6% retracement level, which happens to be the derivative of the golden ratio. The most important observation could be there is an existence of a gap over here that coincides with 78.6% retracement level, which is around 5,700 to 5,720, which means this gap is likely to provide good dynamic support to S&P 500, and we have n number of another dynamic supports like EMA 21 and EMA 55 falling in this particular zone in the area of the golden ratio to derivative of the golden ratio. Now let us have a look to daily price chart for a recent price action. The price is trading in a quite a narrow range. If you look very closely to the price action, here itself is a breakout over here, and this is yet another continuation chart pattern. So the neckline area of this chart pattern is likely to provide support. In addition to that, the price is trading little above EMA 21, which itself will act as a dynamic support. There is an existence of a gap over here. So the major support is around 5,700 to 5,720, and above it there are multiple moving averages like EMA 55, SMA 200, SMA 144, SMA 233. All these are important dynamic support to S&P 500. Important is to see that EMA 55 has already crossed over SMA 200, which is a positive sign for S&P 500. This is a weekly price chart of Nasdaq 100 index. This index finally closed at 21,626.39. If you look at the rounding bottom pattern, during this correction, price took support at neckline area of rounding bottom pattern, which is a very good sign indicating the price action is quite rhythmic. Now, similar kind of price action can be seen. Here there is a resistance, and now the price is consolidating since last 2 weeks. So if a breakout takes place after consolidation, we might have a healthy breakout in Nasdaq 100. Here too we have a gap over here, and this gap coincides with EMA 21 and volume weighted moving average 21 period. Similar retracement analysis can be done with respect to the corrective wave, and what we can see, Nasdaq 100 is trading above not only golden ratio but above 78.6% retracement level, which is a derivative of the golden ratio. So there are good number of supports, and in this also golden ratio's derivative, that is 78.6% retracement level, is coinciding quite near to the gap which is existing over here with multiple confluence like EMA 21 and volume weighted moving average. If you go to the daily price chart, there is a resistance over here where we have seen multiple price rejection, and so the price is consolidating quite in proximity of the upcoming neckline of this area. So once it gives a breakout after consolidation, we might see a healthy breakout in Nasdaq 100 too. Here is the area of the gap that we have discussed, which has a multiple support of moving averages like EMA 55, SMA 144, SMA 200, SMA 233. In this also we can see EMA 55 has crossed over SMA 144 and SMA 200, which is a strong signal in terms of the trend analysis. So considering the gap at 20,249, we might say that the immediate support area is at 20,200 in this index, and prior to that we have an immediate support where currently it is trading quite in proximity of EMA 21 and volume weighted moving average. So to wrap up, the S&P 500 and Nasdaq 100 are both hovering near the resistance zones that we have seen in the price action analysis. While macro cues like potential July rate cut and stable volatility provide support, sentiment has clearly cooled off from the last week's optimism. Now the question is, will the indices break higher, or are we starting at another short-term pullback? Keep watching the price action and stay data driven. And if you are new here or want to build a strong foundation in market analysis, check out Zero to Hero playlist on this channel. Link are given below in the description box. It's a complete step-by-step guide to understanding technical analysis, in a right fashion with real market examples. Until the next time, stay sharp, stay curious. Learning never stops with DK Sinha.